Is Enphase Energy going to go to all-time highs over $229 per share? Were the Q3 earnings really that good that it popped the stock nearly 25% in one day? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys had a great day out there. And I tell you what, if you own Enphase Energy stock, and I tell you what, if you had some call options on this one, you would be absolutely partying all night long, because this one went up 24%, over $42 per share to $216 per share. Look, over the last year, stock's up 67%. But what I thought was interesting, I clicked the year to date. Year to date, the stock's actually down. And then when I got over from a technical perspective, I saw that this time back in February and January, the stock peaked out at a very similar price, upwards of $220, $225 per share. Currently, the shares are trading about $216 per share over at Enphase Energy. Talk about what that means from a technical perspective as well, and then we're going to jump into these Q3 numbers. In fact, I'm not going to waste any more time. I'm going to jump into these right now. So the revenues came in at $351 million. That is up, just 96%. Yeah, 96% over at Enphase Energy. They beat by about 7 million. So the street was expecting just phenomenal growth over at Enphase Energy. Now, I have some experience with this company. I actually put solar on my roof this time last year, and I used a ton of these companies' products. Now, the gross margins. Now, first of all, we're going to look at this from a broad view. Okay, just kind of like get in a helicopter and look down at the financials, and then we'll look at them more closely here in a second. But the first thing I want to look at here is from the broad view. I see that our gross margins slipped considerably under 40%. They were already trending down. You see back in Q2, they were 40%, but a year ago, they were actually 53%, and those dipped under 40%, as this company's probably facing a little bit of competition, but also just trying to push their products out onto the market. Now, the other thing that slipped as well is our operating income. Take a look at this. We were sitting at $51 million worth of operating income last year. Now that was off $178 million worth of revenue. Now we're sitting on $351 million worth of revenue, but because our margins have compressed and our expenses have ballooned, that means our operating income and net income is actually less, far less than it was a year ago and even just 1 quarter ago. Let's jump into these numbers. Take a look at what's going on over at Enphase Energy. So we've got these net revenues. That's up here at the top. The far left-hand column is our most recent quarter. Came in at $351 million. I talked about how in the previous quarter we were at $316, and a year ago, here's our 96% growth, we were sitting at $178. Phenomenal growth on that top line. Now, we've also seen cost of revenues expand, and that has hurt our gross profit to a certain degree. Came in at $140 million. That's still really strong gross profits. And you had about $127 million in the previous quarter. Last year, we were sitting on $94 million. So we've expanded that gross profit, but our margins are starting to compress. Now, we've got other operating expenses, and this is where a ton of the profit and the operating income got chewed up. Take a look at this. Year over year on research and development, basically doubled that expense. Sales and marketing nearly tripled that expense. In fact, I think we did triple it. And then we've got general and administrative, also very close to tripling that expense. That gives us total operating expenses last year at $43 million. Those ballooned to, $103 million. So you take this 140 and you minus 103, and you get income from operations in the most recent quarter coming in at $37.3 million. Now, where were we just a quarter ago? Nearly double that, okay, at $59 million. And where we were at a year ago? At 51. So boy, the expenses and the gross margins have really compressed the operating income for this company. Now, they're still profitable. That's what I want to stress, though. I just did a video on Teladoc. That company is not profitable. This company is, and that's why you can tell that this stock has really bounced. And look, I know that Teladoc and Enphase have literally nothing to do with each other, but investors look at these numbers. They don't care what the company does, what it sells, what it serves. services. If the gross margins are good and the operating income is good and you compare that to the valuation, this is how you make money in the stock market, okay? It doesn't really matter what the company does. Now, we do have a $24 billion market cap on this one. We've got on a run rate for 9 months, so these last two columns are our 9 month ended. I'll take a look at income from operations. It's coming in at $158 million. We're going to be north of $1.2, $1.3 billion on this one on top of that revenue side. So you're still trading about 20 times sales on this one, and you're trading way, I mean, like the PE on this one's got to be massive. Yeah, this says it's about 81 times forward PE. But I will say, you keep growing these revenues at 96%. You introduce some new products. You've got solar acceleration, especially out here in California, where they basically, my parents just built a new house and they had to put solar on it. It's like mandated, okay? And so maybe you can get away with it, but you might as well put it on your roof if you're building a new house, and that's what they're doing out here in California. Every new house that I see is mandated to have solar, and Enphase is probably gobbling up a good portion of that business. From an operating perspective, looks pretty good, okay? We'll also look at cash flows and see where a lot of these expenses are getting chewed up. Is this cash or is this stock-based compensation? We'll talk about that more here in a second. Now, I did want to look at the balance sheet. Balance sheet's really nice over here, okay? We got over $800 million in cash, another $500 million in marketable securities. That's way over where we were at in December. We had just $679 million worth of cash. Now we've got like 1.3-ish billion in cash. We've also got more in receivables, about $273 million. We're sitting at 182 last year. We're sitting on some inventory too. I don't think that's necessarily a bad thing. We were up from 41 up to 65. When you bump up the amount of sales that you're doing, it's actually good to kind of have some inventory. In fact, if sales were going down and inventory is going up, that's like the death cross for an inventory run business. We obviously are seeing the opposite of that. Total assets ticked up over $1 billion over here. Let's see how they're controlling the liabilities. Okay, so our total liabilities did double. Okay, so take a look at this. Debt non-current went from $5 billion, I'm assuming that is, yes, up to $5 million up to $940 million. So that's a lot. I'm talking about a lot of debt bolted on to this balance sheet just over the last year. And you also got debt non-current. I see what they did, and we'll see maybe evidence of this in the cash flows as well, is it looks like they've refinanced some debt that was coming current. They still have about $86 million due, which they've got plenty of cash sitting here, and this is where the bulk of this cash, it looks like it came from, because they barely had a lot of debt, and they just bolted on a ton of it onto this balance sheet. Now, from a cash flows perspective, one thing that we understand about these costs that I went through, the fact that their operating income went down, their net income, which we pulled down here at $21 million. Again, that's about half as where we were in the previous quarter and about half as what we were a year ago. But let's see how it works from a cash flow perspective. What I noticed is this stock-based compensation absolutely blew up. Okay, that went to $47 million in the quarter. We were running at closer to a $15 million run rate over the last quarters or two, and even over the last year or so, you're in that $15 million run rate, a little higher than that since this quarter ballooned. So what I would want to find out if I really wanted to buy shares of this company is figure out if this is a one-time thing or if this is going to continue to reoccur. Maybe this was some kind of bonus that they gave the employees for certain kind of benchmarks. Maybe it's a bonus for an executive. Maybe this will become more normalized. The other thing that you could do is normalize this on your own. So we went from 15 to 15. Let's just make this 20. So we're taking it off about 25 million off of that stock-based compensation. You come down here to net cash provided by operating activities. The reason why I'm doing this is I showed you net income was basically half where we were last quarter and half where we were a year ago. But take a look at net cash provided by operating activities. It's way higher. It's 113 million. In fact, it's nearly double where we were in the previous two quarters. And why is that? Because we got to add back in a gigantic stock-based compensation number. I don't think this makes a lot of sense from an investing standpoint. It is what it is from an accounting perspective. But what I would do is maybe take 20 million off this number. You're still at like 80 or 90 million dollars worth of cash. It was still a great quarter, even when you factor in the ballooning of this stock-based compensation expense. Still a pretty good, really good quarter from a cash flow perspective. I think a lot of investors are looking at that. Now, they did issue some marketable, or they purchased some marketable securities. This is what they did from a cash perspective. We're not really seeing a lot. It's really over the last 9 months. It wasn't over the last 2 quarters where they issued a ton of that debt. It was really in the last 9 months. They got a convertible note at $1.1 billion. And that is where a lot of this cash came from over at Enphase Energy. All things being considered, really nice from a cash flow perspective, especially when you normalize out the stock-based compensation number. Looks pretty good in my opinion. And then from an operating perspective, I love how this company is making money. They're churning out a profit. They're not really diluting you necessarily as a shareholder, at least year over year, at least not yet. And everything is looking pretty good from an operational perspective over at Enphase. I can see why this stock is up huge over the last few weeks. In fact, just a few weeks ago, this stock was down at $145 per share. Now it's up here at over $216 per share, but it is at a critical level. In fact, these lines are on here. We must have done a video on Enphase Energy on this channel before. I think I did it in one of my mashup videos. So that's where all these lines were in there beforehand. Okay, so we had our all-time highs back in the beginning of the year at nearly $220 per share. The all-time high is up here at $229 per share, but the stock got rejected multiple times at $215. Look where the stock is sitting right now, okay? So we have these big red bars right here. This is where the stock kind of tapped out, okay? Yeah, it wicked through it, but this is where the stock settled. Did the exact same thing today. The stock wicked up into this $225 level, but it settled down here at $215. This is where sellers are stepping in over at Enphase, okay? It could be employees of the stock. It could be longtime holders. It could be just about anybody. Sellers are stepping in over $115 per share, and they've been doing that for over a year now. Over at Enphase, basically for the whole year over at Enphase Energy. And so you're probably wondering, where can this stock go? And obviously it can go up or down or sideways, right? Okay, but I'm going to help you try to answer that question. What you're looking for is you need a big green candle. Now, unfortunately, that is red. Professional traders would wait for 2 successive green candles over the all-time highs, which is up here. I think you could call this between 225 and 229. But ideally, you would want that second candle over 129, and you need it to close. We don't need the wick. We need the actual closing price to be over 229. If you have that in the coming days, even weeks ahead for Enphase, we are in an uptrend, and hello, that likely means that sellers have dried up here. And what often happens is when sellers dry up, well, that means buyers take over and this stock can move higher. It wouldn't surprise me if this stock, if it got its momentum behind it, could get up to 240, 250, 260. Just pull up a chart of Tesla, pull up a chart of Microsoft, which I have right here. Look what happens when you get above all-time highs. This is not a candle right here. We can take that off. You get this big green candle up here and you start elevating above all-time highs. We also saw it with Facebook not that long ago. While it has retraced, you got above all-time highs on Facebook and it was off to the races. You went from 330 up to 390 on this stock in literally just a couple months. If you're a shareholder of Enphase, you absolutely want that same thing to happen, but you need 2 candles, in my opinion. Sometimes it's just one on some strong volume. You had some very strong volume today. You'd like to see that follow up. It doesn't necessarily have to be tomorrow, but in the coming weeks ahead, you need to get up above 229 on this one. If you don't, let's assume the opposite will happen. Then this stock is going to get rejected at this 229 level, and it's going to come down to lower levels, which is obvious, right? But this is a critical level, okay? And we are likely, I think, if this stock gets rejected here at 215, 216, which has had multiple times back in January and February, well, if it does that again, it's coming at least down here to 190. So you just want to think about that if you're going to buy this stock. Personally, it's kind of a weird situation. And when I was a younger investor and more novice investor, I didn't understand this concept that instead of buying it here at 215, you're actually safer to buy this stock up here at 225. Doesn't make a lot of sense, but the fact that is that momentum will have taken over at those higher prices, and your odds of this stock going higher are much, much, much greater if you wait for the stock to confirm that the uptrend and the sellers have dried up. If the sellers materialize again, well, look what happens to the stock. It gets rejected. And like I talked about, the very first level where I'd even think about buying this if the trend is broken is down here at 190. You've got levels even lower than that, but I would wait till you break through this 190 level. You break through this 190 level, then it probably in $10 increments all the way down to 135, 115 level. Boy, you'd love to get it down on the dip down here. So we'll see what happens with Enphase. From a technical perspective, it's very, very interesting. From a fundamental perspective, it's very interesting as well. I'd be very curious to see how this company follows up in terms of their stock-based compensation in subsequent quarters. If they can keep that intact, okay, you could continue to reward your employees like you did this quarter, but if we can continue this 90% revenue growth year over year, even if it falls back to 60, even 70%, well, if you can keep these costs intact, well, boy, this income from operation will continue to grow. And then maybe eventually we get to start expanding these margins back up into these 40s. And boy, it'd be a dream if we get back into 50% margins on this one. Those days are probably over, at least in the shorter term, at least from what I've been reading. But all things being considered, pretty solid stock. If you've been in this one, I would not be trying to exit this one unless you wanted to exit out up here from a technical perspective. From a fundamental perspective, I think I'd let this run. And if you have any serious pullbacks on this one, I think you possibly could get this at a far better valuation and one that certainly makes sense. And you could probably get it from a good technical perspective as well. That was Enphase Energy. Hopefully you guys enjoyed this video. We'll be back again soon, obviously, with more this week. Good luck with your investments.